these short-term delivery numbers, it's almost a throwback to when the Model 3 was ramping. It's missing the forest for the trees.
Ultimately, we think that autonomous driving could be 2/3 of the future enterprise value of Tesla.
I don't think anyone's really thinking about the impact on Tesla of robotics generally and humanoid robots.
But also Morgan Stanley had a little bit to say about this autonomous vehicle. They said, or the Robotaxi, they said they think that it'll take a while for doing it. And we're not talking about years, we're talking about possible decades.
Would Tesla be having its own network, or will it depend on networks like Uber or Lyft?
That's what we're looking for the next 5 years. When can I take my hands off the wheel in my Tesla? And I think it'll be sooner than you expect.
All that and more, so let's get to it. Tesla stock is down in the pre-market almost 0.25%, sitting at 172.60. Ever since Reuters broke the report that Tesla will no longer pursue the cheaper version of their models, which Elon declared false, then turned around and said, you know what, Robotaxi unveil August 8th. The stock market really hasn't known how to react. Something tells me the people over there at ARK Invest, they're in the know.
Greetings, everyone. I'm Kathy Wood, CEO and CIO of ARK Invest. I would like to introduce two very special guests. We have TASHA KEENEY, who is, and Sam Corris, both of whom are directors at ARK, and both of whom have spent most of their years at ARK really delving into the new world, autonomous mobility, and starting with the electric part of that, and then into the artificial intelligence. As we've mentioned many times, we don't think Tesla is a car company. It's a robot company. It's an energy storage company. Those are under Sam's purview. It is an artificial intelligence company. TASHA has done our work on autonomous mobility, working with our AI experts. And we think those technologies are converging, and that Tesla is the biggest AI project in the world. All of the AI stocks that are running are going to prove correct if that run appreciation in the stock market is going to prove out. It will be because of companies like Tesla that are going to harness artificial intelligence and transform this world, and in Tesla's case, transform mobility.
It's like the gold rush back in the old days, right? Everybody wants the gold. But to acquire said gold, you're going to need the materials necessary. Those that are selling the pans, the picks, the shovels. There is a very lucrative opportunity being able to supply those individuals that are looking for gold. Our chip makers today are those individuals selling the picks, the shovels, the pans, in order for companies such as Tesla to get at that gold. Applications for artificial intelligence is that gold.
Why don't we start with Sam? Because there is a controversy today around electric vehicles, that part of the story. And then we'll transition to TASHA. I don't think the market's incorporating any of her work in the Tesla valuation, especially if Sam's work on EVs is correct. So, Sam, you want to start?
Sure. And I think what I say is that there's this secular shift happening in a cyclical industry, and I think that's the cause of a lot of confusion. And so what I mean by that is the secular shift is going from gas-powered to electric, but all of that is happening in the auto industry, which is still cyclical. And so we're seeing that interest rates and what consumers can pay still impacts all vehicles, whether those are gas or electric. And we saw that, right, USR for March was 15.5 million, which was lower than the 15.9 million consensus. But there's definitely been a particular pushback on electric vehicles. And so often we'll hear people saying that they're too expensive, the range is too short, there's not enough charging infrastructure. And all of this is changing as battery costs come down, as infrastructure continues to be built out quite rapidly.
In short, all of those concerns that individuals are having right now are being remedied as we speak. Those individuals not entertaining the purchase of a battery electric vehicle today, it will become painfully obvious that they need to switch over to the battery electric vehicle. I akin it to when I was reluctant to give up my flip phone for the smartphone. I was resolute, yes, but eventually I came to my senses.
So much confidence that, these quarterly numbers are just short-term noise. Well, that's the fact that the Model Y was the best-selling vehicle in the world, and we're putting up a chart now, which I'll walk through if you're just listening. But this essentially shows the price elasticity of demand for electric vehicles. So on the x-axis, you have the inflation-adjusted.
This is on the right-hand
yes,
chart, right?
on the right-hand chart, and on the x-axis, you have inflation-adjusted US dollars representing the MSRP of a vehicle. And then on the y-axis, you have the addressable revenue share. And the Model Y is roughly, $50,000. And if you see that on the chart, that's, roughly 5 to 10% of the addressable market is available at those price points. So the fact that this was the best-selling vehicle in the world and it's operating in such a small part of the overall market shows that consumers want affordable electric vehicles. And so when we see battery costs coming down over the next 2 to 3 years, when we hear that Tesla's on the way to coming out with a low-cost electric vehicle, where then the addressable market jumps up to the 50% plus addressable revenue, that's opening up the market almost tenfold from where it was. So we think that these short-term delivery numbers, it's almost a throwback to when the Model 3 was ramping. It's missing the forest for the trees in the whole transition to electric. And I think the other thing, just quickly to touch on, there's the news Ford pushing back its EV plans, focusing more on hybrid as well. And I think the easy way to look at this is that hybrid relative to battery electric, the economics made most sense in 2012 when battery prices were still extremely high. If you go forward, 3 years to 2027, when battery costs are going to drop even further, the economics just keep on deteriorating for hybrids. So we think this is another short-term oriented mistake from traditional automakers.
In short, hybrids are the stepping stone. They made a lot of sense about a decade ago. As battery costs continue to decline predictably, they make less and less sense. Don't get me wrong, there will be some money to be made, but it's not going to sustain you in the long term.
Because we have centered our research around Wright's law, and because Ford and GM, because GM's doing the same thing. They're both pulling back on pure electric cars because they're not profitable. Well, they're not going to be profitable unless they scale them. It's almost not possible.
Ding, 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 ding! Tell her what she's won, Johnny! Your mother f***ing right. How the hell do you plan to become profitable if you don't reach scale? The major difference between Tesla and the legacy auto manufacturers is Tesla's leaving no stone unturned. Battery prices must come down, but as Elon said, the best part is no part. And when it comes to cost reduction, it's a game of pennies. You gotta be giddy when you save a penny on any one thing because it magnifies depending on how large your scale is.
And of course, this is just one side of this big shift going from gas to electric. The even more impactful is going from human-driven to autonomous, and there's been exciting news there. So Tasha, do you want to take us through that?
Yeah, I think, while all the focus right now is really over this concern over demand, looking at, quarterly delivery numbers, I feel like what many people are missing and what we believe is not baked into the stock price is autonomous driving for Tesla. And recently, Tesla has been releasing their full self-driving FSD version 12 via over-the-air software updates to Tesla owners. It's gone into wide release now. Tesla has also started to give any Tesla owner that has a capable vehicle access to 1 month free of FSD. And importantly, why is this update important? Why is FSD 12 important? Well, it's moving towards, a single stack approach. We've heard Tesla say that it's eliminating over 300,000 lines of manually written C++ code.
Damn!
So you can think of this as a less manually written, AI architecture moving towards, nothing but nets. Is the approach that's what Elon calls the approach. It's a totally AI driven approach. You're not training the vehicle on what a stop sign is. It's actually learning that from just looking at many images and videos coming from customer cars. And so we've seen a lot of reports, and Tesla has been augmenting these reports on Twitter. I highly suggest everyone go take a look at these videos.
Here's the latest one for me. Either way, you can go look at my library. I've got tons of videos showing FSD beta and how it matures to FSD supervised. It's worth a gander.
The most dramatic improvement that we're seeing in this latest version of FSD is really on city streets. I know personally from my Tesla, I use it here in New York City and in Connecticut, and I've noticed a really dramatic improvement again on those city streets that, previously the car was a lot more cautious. It's just becoming more human-like. And ultimately, we think that autonomous driving could be 2/3 of the future enterprise value of Tesla.
2/3. And I'm gonna tell you, that might be an understatement. The autonomous opportunity. Holy smokes. And that's just with the robots on 4 wheels. We haven't talked about putting that technology inside a humanoid robot yet.
But just to Tasha's point, right, the Reuters article came out today saying that they'd canceled the low-cost vehicle and the stock price dropped roughly 5%, just going to show that people really are not, taking into account the Robotaxi element for Tesla.
Even though the stock went down, I don't think people appreciate, how important that car is going to be to making the autonomous taxi network viable and real.
Yeah, exactly, Kathy. And I think that, the reaction really shows that people are thinking of the $25,000 car in the context of consumers buying vehicles. When in reality, once autonomous driving happens, what's actually important is, the underlying cost structure of the car. So we already know that from Sam's work on a like-for-like basis, an EV is cheaper, both from a total cost of ownership perspective, but also just from a sticker price perspective compared to a gas-powered car. And of course, when you're operating an autonomous driving robotaxi network, you want these highly utilized vehicles to have low operating costs. So I feel like everyone's concerned, they need the $25,000 car for consumers. When really, I think what, initially the article said, which is, Tesla might focus more on robotaxis for the time being. Of course, again, Elon said that Reuters didn't get it right. But, that is where the cheaper vehicle actually, becomes very important for autonomous driving.
Long story short, the Robotaxi is a part of the next generation platform. If Tesla had infinite resources, we would have tons and tons of products from Tesla. But Elon and the team have to be judicious with which paths they choose to take. If you solve for autonomy today, there's over 3 million vehicles in North America alone that can be turned and put into a Robotaxi fleet. And while this fleet, owned by consumers really, will be useful, it's not where Tesla will make the most money. They need this low cost, low maintenance under $30,000 vehicle dedicated solely for the Robotaxi fleet. I mean, I might put Panda in the Robotaxi fleet every now and then just to make a little extra bread. But Tesla can't count on me or any other consumer of their products to be a part of this fleet all the time. The vehicles that come off of this next generation platform are not only going to be dedicated to the Robotaxi fleet, but eventually sold to consumers for a heck of a cheaper price point.
The other point that I don't think we are even making enough is the safety that that we're going to see thanks to FSD, and in fact, it's not even a futures-oriented comment. We're already seeing Tesla as the safest car in the world.
You're damn right. I mean, I can't stress enough. I am one of the worst drivers on the planet. I need FSD to be engaged just to protect myself and the individuals around me. Whether I'm tired or distracted, or if I'm just oblivious, I don't want to be responsible for the loss of life of my fellow man. The safety aspect of this is what's going to make the regulators want to enact this as fast as humanly possible.
I don't think anyone's really thinking about the impact on Tesla of robotics generally and humanoid robots longer term. So maybe we can you can give everyone a glimpse into the future, and this is purely a call option, right?
Yeah, and they're actively working on this, but we've sized the market as a potential $24+ trillion global revenue opportunity.
Damn, that's a lot of trillions.
Roughly half of which in manufacturing and roughly half of which could be in household robotics. And I think there probably will be a lot of learning taken from autonomous driving to the robotics side.
See what the financial news media has to say when it comes to Tesla's Robotaxi opportunity.
Okay, so a little bit of a bad week, kind of adding on to a bad couple years for Tesla shareholders, Renita, but the light at the end of the tunnel maybe is the robo-taxis.
Well, Elon Musk has done it again. He stoked another post-bad news rally, and this time it came from his late Friday announcement that the Robotaxi will be unveiled on August 8th. Well, actually, technically, he didn't say a year. He said August 8th. So we have little to believe that it'll actually specifically be on this year. Of course, that's the assumption, Oliver, that it'll be happening in this year. But the truth of the matter is the Robotaxi has been announced this is the third time in about 8 years. The first time was in October 2016, and then April 2019. He promised 1 million Robotaxis by 2020. That didn't happen. And then the timing is impeccable because it happened just a few hours after Reuters reported that the Tesla Model 2 was halted. Development was halted for the cheaper Tesla that would have been around $25,000.
Please stop calling this thing the Model 2. Please. It's infuriating.
Now, of course, Elon Musk says that Reuters report is a lie, and because one analyst who wrote for Seeking Alpha said that this shows an unusual level of stress and desperation by Tesla's highest leadership and that things must be really bad. Over at Deepwater Asset Management, this analyst says, okay, if this is true that Tesla is going to release the Robotaxi by August 8th, then it's the right move for Tesla. And being the first to do a fully autonomous vehicle at scale is a huge first mover advantage. But also Morgan Stanley had a little bit to say about this autonomous vehicle. They said, or the Robotaxi, they said they think that it'll take a while for doing it. And we're not talking about years, we're talking about possible decades.
Damn!
You know why, Oliver? Because of all the regulatory issues that will come through with this type of vehicle, not to mention the fact that Tesla already has tons of suits on its autonomous software right now, claiming crashes that happened as a result of it. And so they've got a lot to work out already internally, as well as if they do create this Robotaxi.
I can feel the migraine coming. Regulators are going to leap at the opportunity to remove the human element, which is causing about 44,000 deaths on our highways every year. While I'm driving around giving more data to our AI student driver, I'm afforded the opportunity to look to my left and look to my right inside the other vehicles. People are putting on makeup, constantly talking on their phones, texting, stuffing french fries in their mouth, doing every and anything you can think of besides driving. It is imperative that we remove the human element from this task. Men lie, women lie, numbers don't lie. Again, regulators are going to leap at the opportunity to remove the human element.
Joining us to make sense of it all, Daiwa Capital Markets analyst Jairam Nathan recently cut his price target to 180 from 195, keeps it neutral. Jairam, it's great to have you. Big debate this morning about whether or not this announcement on the 8th is aspirational and kind of the way the semi was, or actually material to their next round of product.
The robotaxi market could be could be pretty substantial if you look at the rideshare revenues today, or gross bookings, kind of 45 billion just in the US, and delivery, restaurant delivery could be another $100 billion in the US alone. To the extent how much of that kind of market goes to Tesla by itself depends on what the model is, right? Like, would Tesla be having its own network, or will it depend on networks like Uber or Lyft, and how much of the assets are they going to be owning? So of course, like if you look at Uber's EBITDA margins, about 12% of revenue, it could be much higher for Tesla.
Let's look at some trending tickers. Investors plugging into Tesla after CEO Elon Musk made an announcement on X, writing that the company will be unveiling a Robotaxi on August 8th. So for more on this, we're joined by TASHA KEENEY, ARK Invest analyst. TASHA, always great to see you here. Thanks for joining us on a Monday morning. So I think by this time we're thinking, okay, August 8th, he must have it down. But we've been told about this, teased about this before in 2020, going back all the time when Elon Musk was talking about 1 million robotaxis. So what should we expect on August 8th here in the great reveal?
Yeah, I mean, you're absolutely right that, one common criticism of Tesla is that they've been talking about robotaxis for a long time. And the question is, okay, well, where is it? Well, I actually think we've seen a lot of progress over the past few years, notably in their full self-driving software that they released to consumers, and they just took that out of beta mode, right, and allowed a lot more people access to the latest version of the software. And what we're seeing in the videos that many people are posting online, nearly full drives, fully autonomously, right? So there's still someone behind the wheel, they have their hands there just in case. It's not perfect, so that, it's not quite perfect yet, but I think that we're closer than ever. And I think that, we take confidence in all the improvements that we've seen in AI over the past few years as well. I mean, that has to help autonomous driving. We do see early elements of some things, some improvements that we've seen from large language models, for instance, bleeding over into the development work that's happening for autonomous driving. So we're really more excited than ever. I mean, we think this is going to drive the future value of Tesla when we look out 5 years. We think it'll be 2/3 of the enterprise value in 5 years. So we're super excited about it. Can't wait for August. So that's what we're looking for the next 5 years. When can I take my hands off the wheel in my Tesla? And I think it'll be sooner than you expect.
You're damn right.
What is the moat that Elon Musk has established for Tesla in the domain of intellectual property?
I'm so glad you asked that question, because this is really what we're most excited about for Tesla's opportunity in autonomous driving. They have an unparalleled data advantage compared to every other company that's solving for full autonomy. They just released on Twitter a graph showing the number of miles that they've that customers have driven in full self-driving. We think that they get, access to roughly 2.5 million miles a day of customer data. that they can potentially use to train their system. I mean, when you look at companies like Waymo, that are like passing roughly like a little over 10 million miles in the total lifetime of the project versus 2.5 million a day. I mean, that's unprecedented.
In conclusion, if you're not following ARC's research regarding Tesla or anything, you probably should be. Innovation is their bag. You may not believe everything that they have to say, but the insights that you'll garner will prove invaluable. It would appear the stock market doesn't know how to react to the news of a robotaxi unveil in August by Tesla. Couple that with Reuters saying that Tesla has abandoned their lower cost vehicle. Spoiler alert. The robotaxi is going to be a part of the next generation platform where Tesla has discovered how to reduce the cost by 50%. One thing is for certain, this next generation platform will be cheaper to make, and Tesla has aspirations of owning and operating their own robotaxi fleet. Maybe if FSD wasn't moving right along, we might not have gotten this Reuters report. But because FSD shed that beta tag and we're in a wide release, Elon and the team at Tesla, they might have a different path to pursue. Back in the late 90s and early 2000s, if you told me I would have the internet in my pocket, I would have called you insane before I started my shift at Blockbuster. Oh, how times have changed. While the skepticism is high for driverless vehicles, I'm here to warn you, it's not as far-fetched as you might think. That's all I got for you today. Be easy. Peace.